If you're a first home buyer in the state of Victoria, do you pay stamp duty? And the answer is no. So long as you are not exceeding $600,000 in the state of Victoria for owner-occupier property, and you will be living in that property for continuous 12 months within the 12 months of settlement taking place, the State Revenue's Office in Victoria will waive that stamp duty. However, if you do not comply with that terms and conditions, you will find yourself having to pay stamp duty. If you've got the intentions to purchase your first home as an investment property, unfortunately that does not qualify for that. That does not mean that if you purchase the property and you comply with that 12 months of living in that particular property, as per the previous statements before, it doesn't mean that you can't convert that property into an investment property later down the track, so long as you have complied with that terms and conditions. The other questions that I wanted to address for first home buyers is, what are the first home buyer entitled to in Victoria? So if you are a single applicant, you potentially could request for a spot within the first home guarantee scheme, so long as you haven't exceeded $125,000 noted onto your notice of assessments for 30th of June 2023. If you're a couple and you have not exceeded $200,000 worth of income noted on your notice of assessments for 30th of June 2023, you can try and get a spot. Obviously, you've got to meet other particular criteria. The other things that I wanted to address to make sure that we keep on track is, should I buy my first home now or wait? As you've probably seen, the property markets in Victoria and Australia-wide are increasing quite rapidly. So from a point of view, if you are ready to go, you've got a stable income and have got a deposit, or even access to a guarantor, which would be going on for your loan facility without having a deposit, then that could actually expedite your entry into the property market. So if you are ready to go now, definitely reach out to see what your borrowing capacity is and what your options are, and avoid price increases of having to sit and wait. Understandably, if you are not quite ready yet, then obviously keep on chipping at it and see what the future brings into play. The last question that I wanted to address, and I often get that particular question raised, is what not to do when buying a first home. Do not go and purchase a property without understanding your borrowing capacity, what the costs are associated to it, and having a pre-approval. So basically what that means is understanding if you're eligible for any government schemes, first homeowner grants, are you eligible for first home guarantee schemes, because then that might actually help you get into the property market a little bit quicker. A lot of people do come to me and say that they think that they need a 20% plus costs on the table. That is an absolute myth. It is 100% based on what is your borrowing capacity at the time that you're making your application. And some of the banks, depending on your lending criteria, may go up to 95% of your purchase price. If you're using lender mortgage insurance, some professionals might actually get their lender mortgage insurance waived, i.e. doctors and solicitors, dentists. They do get that preference with some of the banks to have a smaller deposit. Nurses as well, some of the lenders will waive their lender mortgage insurance to a certain degree, so you don't have to have that 20% plus costs on the table. My name is Moya, local mortgage broker, and hopefully you found that useful. Bye.